Hello everyone and welcome to my channel. Today I'm going to talk about the GameStop stock and the frenzy going around about the stock. As you can see right now, the stock has been closed at $226.61, and after market it is trading at around $187. Let's first go to the first spot that I traded the GameStop and see what happened. So on January 26, I saw this bullish pattern, this bull flag here. I noticed that, and I actually entered at $87.44, and I put my stop loss below this low, and I aimed actually for this resistance area at $106.31, and I closed my position there. So I gained a 2.35 reward compared to the amount that I risked. But the same day, so it was actually a day trade, the stock went much higher, and I didn't expect that. But after that, I was like, okay, I made money, I'm just gonna walk away. The next day, I was just watching the stock. So I watched the stock, it gapped up significantly, there was a sell-off, it moved higher, then it started to consolidate. Right in this spot, I noticed this falling wedge pattern. So I put a buy order slightly below this area, and I was like, I want to get in at this spot. But then it actually broke off and it closed around here. I was like, okay, if I'm gonna enter the move, I'm not gonna enter here. I want a better price. So actually I just waited. And next day, actually, I bought it at this spot, like $284 and I think 30 cents on this line. I was looking to buy it at this line, and I put my stop loss below the previous day low. And I closed it after this bullish, bearish engulfing pattern. And after that, I'll just watch the rest. And one thing that you may notice is that I actually bought it here. This is not usually how the textbook patterns would say. Let's look at the falling wedge pattern. So this is the falling wedge pattern that usually you can see in the textbooks. So basically, this is an example. So there is a wedge that is actually moving downward. The way that people are usually trade that is that they wait for a break of the structure, and then they put the stop loss below the lows in the structure. Then they have a target price. But let's look at what would happen if you would have done this with the GME. That's why I don't trade like this. I prefer to trade inside the pattern. So if you would have done that, so basically it was a break off here, and even there was a break here, but then the next day you would have stopped out. That's why I prefer to buy at the low of the structure and put my stop loss, actually, if you consider a pole here, like a bull flag, but with a falling wedge, I prefer to put the stop loss below this. If we go below this, we gotta go much lower. So I put my stop loss here, and I closed my position at the spot, and for the rest of the day, I was just watching the stock. Now, today I didn't touch the stock, but then I saw this pattern. So if you go to the 15-minute time frame, you can see that there was kind of a symmetric triangle, and then during the day we broke off this triangle. So it actually is very bearish at the moment, and as you can see, after market it is trading at $185.50. I'm not shorting this stock at all, because it is not following any fundamental or uh, technical analysis at the moment. It is mostly emotional, but I think it's not a good spot to buy it. If you want to buy it, you should probably wait for a break and hold above this level. If the price breaks above this level, that means that the traders, which I think there are mostly retail traders, were actually trying to trap some people here on the short side, and then they move the stock higher. So I would probably consider buying it at above $335 if it can break above that, but I'm not going to short it in. But if you're interested to short the GME stock in this area, I would suggest you to wait for a better price. For example, I suggest you to wait until the price reaches to this level, so you can get a better entry price. Put your stop loss above $335 mark and write it down. I personally would not do that, because simply there is so much hype behind this stock and it can rip through that, and I prefer to go with the trend at the moment. So the way that I will trade this is that if the stock breaks above this $335 mark, if it breaks above this area, I'm gonna buy it, and I'll put my stop loss probably around 250. And if it breaks this level, we're probably gonna make new highs, or at least try this previous high around 450. So this is my plan for the GameStop, and if it continues to fall, I'm not gonna touch it. It's too dangerous at the moment. Anyway, whatever you do, try to not risk more than whatever you can afford to lose. Always think or assume that you're gonna lose that trade. So you're gonna trade another day. That's the way that you can potentially make a living out of trading. I would like to thank you for watching. I appreciate if you can subscribe to my channel and destroy the like button for the YouTube algorithm. Enjoy trading, trade safe, and manage your risk. See you in the next video.